Well, thank you for joining us. My name's Nate Angelo, head of wealth management here at Miracle Mile Advisors, and I am joined by team members and partners here, Shane Larson, CFP, and the legendary Peter Karp. And we are excited to tackle some of the questions that we are hearing most frequently from our clients. And so this is going to be a short conversation where hopefully we are addressing items that might be front of mind for you and or friends or family members that you're engaging with as a way to just continue to create more dialogue and more real-time collaboration between us and our clients. So with that, I want to kick off this conversation with a question for you, Peter. We are entering an election cycle as November will be here before we know it, as we're already into mid-June. A lot of clients are talking about, what does this mean for my portfolio? And more importantly, it's not what does it just mean for their portfolio, but I think they're really anchoring to their nervousness, the uncertainty because of all the headlines they're reading about and hearing about. And so, I think, Peter, the question that it boils down to is what can I do to protect myself as a client?
Great question. So the number one thing you could do to protect yourself as a client is really focus on your asset allocation. Asset allocation and diversification is paramount when controlling risk in a portfolio. There's also, so I would definitely take a look at where you're invested currently and see if that volatility is within your comfort zone. There's also different hedging strategies. There's covered call strategies, there's buffers. But the main thing is talking about how you feel going into the second half of the year, given how contentious this election cycle is going to be. And in regards to elections, I mean, we have elections globally. Went through just one of the largest number of global elections in 2 decades. We're having an election here at the end of the year. We have midterms, but the main thing is what are your goals? What are your income needs? And what asset allocation is prudent for you going into this election cycle?
Yeah, Shane, on that same token, we often, I think, blur the line between politics and markets, yet I don't think there is actually a direct correlation. Any comment you want to make just around, politics relative to markets?
Yeah, I mean, good businesses that make cash flow, they're going to make money with a Republican in the office or a Democrat in the office. That doesn't really matter to them. And if you go back and look historically, presidents and politicians really just have very little effect on the overall market return. So really, again, it's really echoing what Peter had said, is focusing on what's important to you, your asset allocation, and let politics be politics and let businesses be businesses, and stay focused on what you can control.
Yeah, well said. And I think, if there's ever a time to have a financial plan or review your financial plan, this is a time to do it, because it's that
Absolutely.
plan that can help remove that emotion that gets ramped up when we're hearing headlines and reading, a lot of the entertaining articles that are coming our way, and or the conversations, quite frankly, that we have in our circles of friends and communities. So, we're gonna now let's shift gears and talk about taxes, right? So when Trump was in office, the Trump tax cuts got put into place, and so those tax cuts are sunsetting in 2026. And so people sometimes think, oh, 2026 is 18 months away, but the reality is there's actually things that we might want to be thinking about as advisors with our clients and helping them optimize their tax situation, their estate situation, based on the existing tax law that's in effect today. Maybe Shane, you want to comment relative to clients and their estates and their taxes, some things that maybe they should be thinking about.
Yeah, I think the big one that we're working with a lot of our clients right now is the potential sunsetting of the estate tax exemption levels. So as of right now, an individual doesn't have to pay estate tax on their estate that's over 13 plus million. For a married couple, it's like 27 million. Come 2026, that's going to be cut in half. So 7 million for a individual and 13 million for a married couple. So the IRS has already come out and said that they're not going to proactively go back and take any gifts or anything else like that. So there's a unique opportunity if you want to do some significant gifting, to basically take advantage of that exemption level before 2026. However, if you want to do that, you gotta start doing it now. I was just at a conference a couple weeks ago. There's a lot of estate planning attorneys there, and they kind of reminded us of what that this has happened before, and they reminded us of what happens. And one of the stories they talked about, the last one being in 2016, people were trying to do it at the last minute, and they were either flat out said no or needed $150,000 retainer. Like, you need to be talking to your attorneys about this now. So if it's something that you want to look at, want us to look at, I think those conversations, those should be happening now so we can start planning for it. And then again, when we get to 2026, who knows what will happen? Will it sunset? Will they come up with something? The funny story they remembered we heard from that conference was back in 2012 they did this. If you would have they didn't get it done till on January 1st, 2013. So if someone passed away between the hours of 12 a.m. to 2 a.m., their exemption level was $1 million, but then after two, it bumped up to 6 million. So
Yeah.
who knows what's going to happen? But let's plan now so we can be prepared for when that does happen.
Yeah, it's interesting. We have our own, estate attorney as a part of your team here at Miracle Mile, and it's part of just the value that we're trying to deliver to clients. And so I know Peter and Shane, you've been partnering with our estate attorney with specific client conversations, and would love to engage where that makes sense. And it was sort of out of that vein that, Peter, we were chatting the other day, and you mentioned just some of the estate reviews that this is sort of spurred for you to do yourself as a financial advisor. Any, not asking you to go into details about your estate, but any comments you'd make just, from your own personal experience over the last couple of months and working through this?
It's a process. I mean, it really is. You need to ask yourself the tough questions. And it's not, estate planning isn't, flipping a switch and you have an estate plan. I mean, putting a trust in place is just the beginning. I mean, it's not even, it's just buying a ticket to the show. It's not even getting to the show. For most of our clients, there are so many other programs that they could put into place to help reduce their taxes. And it gets them to refocus on what's truly important to them, and what kind of legacy they want to leave. It's super important. I mean, everyone talks about, we work with these phenomenal business owners, and corporate executives and people that really have some incredible accomplishments. And it's incredible to me that they've thought very little bit about, what's going to happen if something happens to themselves, their spouse. And it's important to let us go on that journey with them to help them get from really not just starting the planning process, because people start the process, but actually go through the whole process to have something that could stand up, in time. And this is what's important.
Yeah, and I think the old saying, Peter, of the two things that are certain in life are death and taxes. And the reality is, while we say that in jest, there is so much that can be done, to help mitigate and optimize your situation. And most importantly, and this is part of like the probably the most joy we get in these roles that we're in with these clients, is it's an honor to help talk through what they want their legacy to be and to help strategically think about how do we implement this. And just because you put an estate plan in place 10 years ago, it doesn't mean that there aren't, an evolution of that plan as time goes on. And so I think you said that really, really well around it is a process, an ongoing process that we should be, engaged in, would love the opportunity to be engaged, I should say, with our clients on. So we talk about death and taxes, and the other thing that's ultimately going to happen at some point is people, face retirement. And so in our last question for this session, want to talk about clients preparing to retire. And one of the emotional connections that we have that is a subconscious thing in our heads is we get tied to this paycheck. Whether we're a business owner and we're taking distributions, whether we're an employee at a company and we're used to the bi-week or the bi-monthly paychecks, whatever that thing may be, we get to this bridge into retirement. We start to ask ourselves, oh my gosh, how am I going to pay for things? How am I going to go to the grocery store? I don't have a paycheck anymore. So maybe Shane, you want to talk a little bit about some of the work that we're doing with clients on a planning basis to help ensure that they are actually getting a retirement paycheck that is using all of those hard-earned assets that they've earned over time to fund retirement and have peace of mind at the same time.
Absolutely. Yeah. And I think you're right, Nate. Like retirement is probably one of the most biggest decisions we're gonna have to make in our life. Like you're picking a day when you're walking away from a steady paycheck and you're gonna live off what you save for 30, 40, maybe even 50 years. That's a big choice. So really sitting down and putting together a financial plan is really important. And the first piece to start with is really your cash flow. How much money do you need? How much money do you, what do you want to do in retirement? Are you going to be traveling? Are you going to charity? What are you going to be doing to keep yourself busy? And so then once we kind of know your cash flow, what you're going to need each month coming in, then from there, we'll want to work on like, how can we be the most tax efficient? Because if you don't really have a plan, you can really, retirement can get really, really expensive, especially later on when you start getting your 70s and you got to take required minimum distributions. Tax bill could be really, really expensive, and that's just going to eat away at what you can spend on the things you like doing in retirement. And then the silent killer that, it's been on it's been on the mind of people because we talk a lot about it, is inflation. That can just eat away at your power too. So you have to make sure that you've got enough money for today. It's paying for your bills, but you've also got money that's going to, outpace, both those taxes and inflations. But I think one of the things that's exciting about from an investment standpoint is bonds. Bonds are exciting, which, I've been doing this for 15 years and I've never said that. That's just how long it's been like that. So Peter, maybe you can kind of share what's exciting right now with bonds and fixed income.
People are actually taken back because I'm so excited about bonds. Savers are finally getting paid to save. I mean, a few years ago, it's always been about asset accumulation and then distribution and creating income retirement. I mean, you can't take it with you, even though you want to leave a nice legacy to the people you love. It's about you, and it's about creating this income. And so a few years ago, interest rates were virtually zero. You put money in a CD, you put money in a treasury, and there is no way you could live on that money. Now you're actually getting paid. And so we could create a sustainable income that is not subject to the volatility of the markets. And that was another thing. Markets go up, you would take profits, and that's what you would live off of a few years ago. Now you could actually live on two components. You could live off the income, and sure, you could take gains over time for unexpected expenses. But I got to tell you, I haven't been this excited about working with our retirees in a long time.
Yeah, well said, Peter. Hey, look, we've covered some ground, today as we've talked a little bit about the elections and the emotional, charge that comes in those seasons and trying to be disciplined and prudent, which leads to, financial planning conversations that then eliminate all of that noise and get us centered on our goals. We've talked about legacy planning and estate planning. We'd love to, quite frankly, be honored to partner with our clients that haven't, had an estate review. And sometimes that can be a basic estate, just basic wills and trusts. And so if you haven't done so we'd love to introduce you to our estate attorney and do a review of what you have. And then ultimately, as we all, march towards this idea of retirement, we'd love to be front and center in our clients' lives, helping them plan and optimize their hard-earned assets to work for them in retirement. And so, Peter, Shane, always fun. To our clients, it is an honor and a privilege to be on this journey with you in life. And so we don't take it for granted. If there's anything we can do for you, if any of this has spurred a question in your mind, please, reach out to us. We look forward to future conversations. Have a great day, everybody. Take care.